All right, bang bang. Take two, take two. Oh no, no, I do not want to exit. I'm sorry. Okay, bang. Let's go. Let's go. Let's go. Let's go. This second take, second take. This is a great video on support and resistance. Okay. This video is gonna be well. First off, hello. I hope everybody's doing amazing. I know I'm all over the place right now, but I did just record this video and literally right after uploading it, I went through to watch it and realized that halfway through, audio cut out, so I'm redoing it right now. But this is a video on how to properly apply and round your support and resistance zones, okay? This isn't going to be so much of a basic video on how to find support and resistance. That in itself, I think, is pretty basic. When price is respecting a zone a lot, then that is going to be a zone that you want to be looking at or potentially marking up. You know what I'm saying? I hope that makes sense. But this video is not going to be the complete beginner video on support and resistance. More so how to round your zones and how to properly place them so that they're accurately placed on your chart, and so that you're able to use them more accurately for your trading. Because if your zones are not marked up properly, if your zones are not rounded properly, then it's going to be really hard to how should I say this? It's going to be really hard to properly know when price is rejecting or closing above or below an area, okay? I know that may be a little confusing right now, but let's just get into it, okay? So how to find support and resistance. First things first, I start on the 4-hour time frame. 4-hour time frame is a good time frame for me because it seems to be less random than the 1 hour and 15 minute, even 5 minute. Now there are zones within the 15 minute, 1 hour and 5 minute time frame, but even on the 15 minute time frame, we could see if you were to try and mark up zones on this 15 minute time frame, you're going to be marking up zones all over the place because you're going to be thinking that it comes up, makes this little zone right here. You're going to be marking up a zone right here, then it's going to come down, you're going to mark up this little zone right here, then it's going to go back up, not even meet this zone, then just disrespect this zone completely. So it's really important to just use your higher time frames for these main zones. At least that's what I do. If you're following the group, that's what I do the majority of the time, okay? I do find smaller zones on smaller time frames, but that's not what we're talking about. How to properly apply my main zones that I apply, just to watch price ping pong back and forth. It's really important to just find the big swing areas. You know what I'm saying? Like we could draw up a zone, like we could potentially draw up a zone right here, right? This is a little zone in itself, right? That's a zone, right? Now when price gets up to it, respects it, comes through, touches it, blows through it, respects it, respects it, respects it, respects it, respects it, goes through it, respects it again. Now obviously this is going to be a key area or a key level that price may respect when it gets to it. Me personally, I'm not going to be trading off this level, and I'll tell you why. When I'm marking up my zones, I like to mark up zones based off of what kind of swing is coming off of that zone, if that makes sense, okay? Now, a zone seems to be more significant to me, at least while I've been trading, it seems, and what I've learned, price seems to be, a zone seems to be more respected when there is a bigger swing off of it. That makes sense, okay? So we could, draw a zone right here. This could be a zone. Something like that, right? Now you can see when price comes up to it, it had this big move up there. Now when it comes up and it settles, it closes right above the zone, right? Closes right above this zone. Now these zones aren't rounded. This is me just drawing them up really fast, and it kind of looks really good because I've just been doing it for a while. But you can see even after I round zones, okay? I'm going to go ahead and delete this zone. I'm going to get into how to round zones, right? When you're a zone, I have these zones marked up, right? When I get into these zones, this is what these numbers are for, okay? When I mark these zones up, I don't want to just leave this zone like this. And the reason why you don't want to just leave this zone like this is because it's not rounded. And you want to round your zone because that's where institutional traders are going to be placing orders. And institutional traders not just going to be placing an order at any random number, okay? And institutional traders tend to place orders off these psychological levels and these quarter levels, right? So when price isn't near the 200, 500, 800, 1,000 level, you're going to be looking for one of these zones, obviously, to round it to, if it isn't near one of these levels. That's honestly before the 100 levels, because obviously 100, 300, 400, 600, 700, and 900 are going to be even more significant than these zones. But these zones tend to be more significant reversal prices, okay? And if you don't know what I mean by 200, 500, 800, 1,000, go to USD CAD. The 200 level is just 27, 200, okay? So 27, 200, somewhere around here, right? 27, 200, and then 27, 500 is a 500 level, or 26, 500, and then 26, 800, and then 27 is the 1,000 level. So 1.27, that's the 1,000 level. Okay, that makes sense. I hope that makes sense. And then obviously when it's not near those levels, if USD CAD was, right here, right now it's near the 700 level. Now that is closest to what level? It's closest to the 800. Now if I was to mark up a zone and it wasn't rounding next to the 800 level, like let's say I mark up a zone right here, right? Bang. I draw this zone, and let's say this is my zone, right? Now I want to round this zone to the nearest number, right? That's near the 900 zone. And this seems to be near the 200, which is a good quarter level, right? So if we bring that to the 200, bring that to the 900, that zone is pretty big. I don't like it that much. So we're going to actually go ahead and move this up so it's not cutting through those bodies, right? And we're going to go back here again. And then bang. Look at that. Now it's at 1,000 level, 2.7. And look at how clean that zone is. Closes below the level, then taps it and moves down. And look at the move off the level. And look at the closures. This is why it's so important to make sure that you're rounding your levels to these quarter numbers, because the closures of the candles are what's gonna determine your entry trigger. You know what I'm saying? If you have a zone right here, but your zone is marked up a little bit like this, that changes your whole analysis, because now price is closing inside of your zone instead of above your zone, and this is still having the potential to move up. You know what I'm saying? So if you're rounding your zones and you're finding the cleanest price action, and you're going in here rounding it 175 and then 1,000 level, you can see how clean price is respecting this zone. Look at the closures. Look at how it wicks into these zones, these numbers perfectly, right? A lot of people are drawing their zones, and they'll see this level down here, and they're just like, okay, this is a level of support, and they'll do that, and they'll just leave it there. And then candles are closing all over the place. Yeah, you might get some lucky stuff like this where it bounces off the bottom of your zone that you just happen to place there, but you want to make sure that you're rounding your zone so that you're getting the best probability of trading with institutions, because that's how you're going to get your bigger moves, right? Now you can see, even after I rounded this zone, what you want to do after you round your zone on the 4 hour is drop down to your 1 hour and see if it's respecting it. Look at this. Drop down to the 1 hour and look at how clean it's respecting the zone. Even if I go over here, look at the price action around these numbers. It is stupid clean. It getting below this number, test it, shoots through it. Look at, like, it's crazy how accurate the zones are once you learn how to round your zones. But it's wild. Like, even when I round this, like, I can drag this all the way over here. Watch how this happens. I rounded it all the way over there. I didn't even look at this, and watch how clean this respects this. Look at that. Literally comes through it, shoots, disrespects it, tests it, shoots through it, tests it, and falls. I didn't even look at this zone over here, but because I knew to round my zone, it's like this zone is just plotted on the chart, and all I needed to do was find it. You know what I'm saying? So it is super important to learn how to round your zones. I made a video like this because I bought a course for $150. This was one of the videos, one of the beginner videos inside of the course, and this in itself was worth $150 to me because I could not find this information for some reason. It was just something that I didn't know. I didn't know that I didn't know it until I ran across it. So hopefully somebody can run across this and take this and use it. You really want to be rounding your zones to these numbers, okay? Even at, like I said, these right here. I mean, these ones, okay, 800 level. If I was to round it to the 877, 775. Look at how clean the price action is on this zone. Drop down to the 1 hour. Test the zone perfectly. Now that's a little messy right there, but you can even see test, and it's inside this zone like perfect. Now honestly, if I was on the 1 hour, I can see that I would want to move this up a little bit. Probably like that. Now that's 825. Just the next level. You can see 800. Now the next number, if it's not at 800, would be 825, right? So I just move it up to 825, and now you can see it respects it a lot cleaner on the 1 hour. Bang, taps into it literally to the pip. Look at this accuracy. Taps into it, taps into it. Look at the closure above here. We moved it up to 825, and look at the bounce, and now we have this little consolidation zone inside here. This is like a little demand zone, right? And then it just shoots off into the moon, and you can just see how accurate your zones are once you learn how to draw them. So this is a video that I really wanted to make, right? You really want to make sure that you're you know, this right here, this is a good example of just a zone that is going to be really accurate, but you also want to make sure that you're adjusting price to recent price action, right? If I had this zone drawn up here, you know what I'm saying? I could have had this zone right there. Look, it actually looks not too bad. It's crazy how accurate these zones get once you just learn how to draw them a little bit. But look, I can bring this down to 300, it looks like. Bring this down to 225. And that's where I probably would have had a 4 hour zone back then, right? But then when it comes up here, it doesn't tap into it all the way. It does wick into it, ends up playing out over here, and then it ends up actually kind of respecting it over here on this side, but you wouldn't have been able to see all of this or understand that there's actually a zone right here, right? You would have not understood that there's a zone right here because you have this zone right here. You might have been hesitant to draw a zone right here considering they're so close, which is why you always want to make sure that you're adjusting price to recent price action, okay? I don't remember where I had this zone. I think it was like, I don't know, it was somewhere around there. But this video, I hope it helps somebody. I didn't want to make it too long. The last one cut out. A little tips and tricks about support and resistance. Obviously, a lot of people think that, you know, support and resistance, if a price is touching a support or resistance, if it's touching a zone a lot of times, then it is stronger. It signifies that that zone has strength, and to a certain extent that is correct. But after a zone is being touched so many times, you want to make sure that you recognize that a zone is getting weaker the more times it gets tapped. It's not, and this is the example I had in the last video that stopped recording. You can see this big area of support, right? We drew this area of support. I'm not going to round it just because we're doing this quickly, but bang, touch, tried, and then came down and touched it again, right? When this bullish engulfing happened on the 4 hour, that's just a candlestick pattern. When this bullish engulfing happened, people would have entered. It would have had their stops below these candles or just below this wick, just because this is a quote-unquote area of support, right? They would have had their targets maybe up here, even up here possibly, for some people that are, you know, just looking at the chart differently. But, you know, a lot of people would have bought right there and got stopped out because that area of that level of significance is getting weaker because it's getting touched so many times after a big swing, right? Like if we were to look at an area like, where was it? It was like this one right here, right? Or to look at this area, you can see this area gets touched, this zone gets touched 1, 2, 3, 4, 5, 6, 7, 8 times before it falls. And it's not that this zone is getting weaker because it's getting touched. Look, this zone only got touched 1, 2, 3, 4 times, and then it fell. The reason why this area or zone seems to be holding up more is because it's little like consecutive candles, if that makes sense, right? I know this is on the 4 hour, so I don't know about finding this on the 15. It's really far back, but even if we were to go to the 1 hour, right? This might take a second. Okay, so you can see this top zone. Look at it's still consecutive candles. It's like 1, 2, 3, 4, a little move 5, little move 6, 7, 8, 9, little move 10, 11. Now, in a situation like this, I wouldn't necessarily be looking for a sell off this zone. Some people are, but that it to me, I need to wait for more confirmation. I'll probably look for an order block above this zone just because price tends to grab liquidity above these areas before swinging down. But the reason why this zone is getting weak after 4 touches is because of the swings that it's having after it touches it. Right? When price touches this zone, it's not going anywhere. It touches it, 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 and then decides to fall. This touches it and then has a big move up. It touches it and moves like what this moved like, what is this? Okay, on the DXY it's a little different, but that's probably like even on the DXY, you can say that it's like 260 pips, right? And then it falls back down, same move, hits it and then goes up about 200 pips. Falls, hits the zone, goes up about 200 pips. When it was hitting here, it was moving like 10, 15, 20 pips. You know what I'm saying? So when a price is making big swings off of a zone, that area tends to become less strong. Okay? I hope that helps. That was really what I wanted to say about the support and resistance levels becoming stronger and weaker. A lot of people look at a level, right? And they're like, okay, this area is getting touched a lot. So when it gets here, it's got to make a big move off of it, right? And that's not the case. Like this area right here. You can see this zone that we drew up. It touched it was all up inside of this zone. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 touches. And before this touch, it had 9 touches right here, right? Let's say we went to replay mode. It was right here. It had 9 touches, right? So let's say we were playing, or right. Let's say we decided we wanted it hits this level, right? Now, just because it hits this level, a lot of people are gonna be like, "Ooh, it has so many touches off this level. Ooh, 2 wicks. It's about to make a giant move down," and they're gonna set a sell right here. Oh, that's not a sell. That's a fit. They're going to set a sell right here. They're going to have their stops below this or above that. And they're going to have their profits like down here, or like somewhere down here. It's not even going to be, it's going to be like somewhere down here, right? And then you can see if we play price, it's going to go down, but then it's going to go up and stop you out. And that's because this zone is an area of significance that we want to be paying attention to. But look at the levels, look at the swings off of this zone, okay? It comes up and touches into this zone. It did have a big move. So we can expect that into this zone, we're going to be getting a move at least of this size, okay? And that's on a good trade, right? Because we can go over here and clone this. Like, how do I... What? I'm confused. Okay, there you go. Clone, right? You copy this, and you can see it makes moves this size literally all the time. Now, this is literally this same move, and it starts from the bottom of this wick, right? This down candle, it's going down and then moves up, and then it literally stops at this close. So you can be expecting moves to be of this size at some point, but the general move off of this zone tends to be pretty small, right? It bounces off of it, doesn't really go far. Bounces off of it, doesn't really go far. Disrespects it. And then it doesn't really use this zone as support before this move. It just blows through it, which is important, okay? And then when it uses it, doesn't really go far. Uses it, doesn't really go far. Disrespects it. Uses it, and then has that almost the same size move as this move over here, okay? And it actually just comes down and probably tests an order block down here somewhere. But that like this area right here, you can see when it touches this, big swing, touches this, big swing, touches this, big swing, and then when it comes up here, plays around, this is probably a fake out, touches it, big swing. And that's how you want to be paying attention to your levels and like the significance or strength of them. But you don't want to be looking at it like, ooh, it touching it 10 times, it's super strong. Like that area is probably about to break through. But yes, this was a level on rounded levels. I hope it wasn't too long. I hope it helps you. Psychological levels. You just want to make sure that when you place this zone on, right? Just a quick recap, okay? You're going to be going back like this. It's going to look like this. It's going to look like nothing. You're going to be on your chart, right? You're going to come to it, and you're just going to be looking for areas of significant respect, okay? So you can see price is respecting this area a lot, okay? If I was to draw a zone, this is just a makeshift zone because you just have to place something there for now. It looks something like that. Now, it's important when you're drawing your zone to make sure that it's cutting through the least amount of bodies as possible, okay? And that's important because you're paying attention to candle closures before you look for moves, right? Like this right here. It has 1, 2, 3. And I know this isn't rounded yet, but okay, look, let's say, I think it's like, even if it was there, there's 3 4-hour closures below this level, which is a good significate, which is a good a good sign. I didn't know what word to use. A good sign to start looking for, you know, price patterns, break of structure, anything to signify that this is going to continue moving lower, okay? So right, we're placing this on, we just want to make sure that it's cutting through the least amount of bodies as possible. Now right here, this candle is just coming up and closing through. These two candles are closing but in the zone, but it looks like that was a little fake out right there, so I don't really pay attention to those. And then just these two candles right here. So right, you know, you can see, you can kind of just pick and choose where you want to draw your zones, right? There's not a correct zone, but you can tell the more and more you draw your zones that you start to realize, you know, you'll start to just draw them on cleaner habitually. Like, look at that. I just dropped it at 175 without rounding it. And that's, you know, it's not 200, 500, 800, or 1,000. So at 100, if it's near like 160, you know what I'm saying? Or, you know, at 160, I'd probably be looking around it to 150. But at like 167, you know, or 169, you know what I'm saying? You'd be looking around it to 175. And that's where I rounded it, okay? And then this one right here, probably, let's just try 100. See what it's looking like. And it's respecting it pretty nice. You know what I'm saying? And then from here, you drop down to your 1 hour. You look at how it's respecting it. It's respecting it pretty clean. Right? Go over here. See if it's still looking good. Closures are looking nice. Fake outs are looking nice. It looks like a good zone. And then from there, you can look for price to respect this zone, okay? And if you're drawing it based on your 4-hour zone, then I'd go to your 4-hour to look for closures. That's what I do. You don't have to personally follow me, but I look for closures on the 4-hour, and then I personally look for 1-hour closures too. But I look for like 2 or 3 closures. So I guess that'd be like a 2 or 3 hour closure instead of, you know. But besides that, I'd look for 4-hour closures above or below these levels, you know what I'm saying? And just because I have this level marked up, let's do this. That seems to be better. Okay, that looks cleaner to me, right? So since what was I saying? I don't remember what I was saying, but you want to be looking for closures above. Oh yeah, that's what I was saying. So inside these levels, okay, you don't want to be ignoring price just because it's inside of this level. You can see when like this zone is drawn up right here, right? If I had this zone drawn up right here for some reason, like back here, you know what I'm saying? Like let's say I was replay mode to like back here, you know what I'm saying? Let's say for some reason I had this zone drawn up already. When it's playing, you can play it like this. Price is inside of this zone, okay? You don't want to be ignoring price just because it's inside of the zone. The top of this zone is a significant area, which is why you rounded it off to that number. So if it has a closure below this level, another closure below this level, you can see it just fell. 2 4-hour closures below a level or below or above your level, that is a good sign to start looking for price patterns, breakup structure, anything like that. Okay, now right here, if I was just to use an example, okay, let's go back to the 4-hour. Let's go to right here. Bang, it does this. Okay, now I go to the 1 hour and or 15-minute. Right, this is where you start looking for breakup structure or price patterns. Now myself, trading 4 hours zone to zone without using order blocks, this looks like it's an M pattern. So I would have personally gotten it. Now it does suck because in hindsight, a lot of people are gonna be like, "You already saw that go down." Nah, 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 nah. But just the way that I've learned, I look for M's and W's, little double tops and double bottoms all the time. So if this was to continue down, then obviously we can see that move further. And as you can see, it just drops. Okay. Now that is how you'll round your zones. I hope I didn't make this video too long. I hope I didn't make it too confusing, and I hope it helps somebody because I paid $150 for basically this information, and I honestly I thought it was worth $150, but it's way more useful if you can get it and find it for free. So yes, I hope you start using support and resistance. I hope you start rounding it nicely. And by the way, free Telegram group in my bio. It's my only channel. My only channel. I know a lot of people have a free Telegram channel or a free Discord channel, and they like to, promote their paid signals inside of that chat. That's not what this is. I just started this mentorship group, so all of my quote unquote signals, which I don't really like to say I send signals. I like to send like an analysis, I like, because nothing's for certain. So I don't really like to send out specific numbers because I like you to learn. I like things to be up to you because if I was to just disappear one day, you still got to be profitable, okay? So, yes, that's that. One-on-one coaching calls also in the bio on my Instagram. I'll leave a link in the description. If you're a new investor, they start at $20. If you're more into things and you just want to talk about maybe advanced strategic things, order blocks, price action, anything of that sort, then go ahead and schedule a one-on-one there in the link in my bio. I'll get back to you within 48 hours. And yeah, go ahead, join the Telegram. Learn. Really the goal with this, I know I talk a lot, but really the goal with this YouTube and this mentorship group is just to give to the Forex trading community, what, because it's not so hard, I guess you could say it. Give what other people are giving, but for cheaper. Okay? Because a lot of the stuff that we find on courses, a lot of the stuff that you'll find when you start purchasing courses is just little finite details of the things that you've been learning on YouTube. It's just like I said, it's things you didn't know. Like this. When I was drawing up zones before I knew this, I was just seeing this area of support and I just draw up a zone like this. And I leave it like that. And this changes your whole bias, okay? And I probably would have drawn it something like this because it wicked in right there, so I would have drawn the zone up or something like that. And it's just like you have to know you have to know to do certain things, and you know courses are for that, I guess. People pay lots of money to learn the little finite details so that this this stuff becomes easier, okay? But I kind of want to avoid all that. I kind of want to make it simplified, but also get the complicated stuff in there, but try and make it simple. Also, not for so much money, because the complicated stuff tends to be really expensive. I bought an expensive course, and then I ended up buying $150 course, and I bought another course that was like $40, and you can definitely tell the difference in price. But um, like I said, still the more expensive course that I bought, I'm not even gonna say how much it was. I don't think it was worth that much money. I could go out of my way, make a course, and price it for the same amount of money, if not more. But I think that is smart, and it's the better thing to get a lot of individuals trading on their own terms quickly. You know what I'm saying? And a long, hard to understand course that is talking about a million different things, and not so much the psychological things and the things that you need to do as a trader in order to get better. It's not just lines and charts and bar graphs. You know what I'm saying? Like, a lot of trading has a lot to do with your plan and you and your health and your mental stability and everything that's going on with you. So I hope that we can get a lot of that out the way and learn a lot of the hard stuff for not so expensive and not so difficult. Yeah, this is Jelante. I hope y'all are doing good, man. And yeah, I'll talk to you later.